I think I said this before, you're going to get a loan, try to get it from somebody that is not a bank. Hello everyone, welcome back to Imparables. My name is Jose Miguel Taramona and I'm director of Ludus Mastery, and today is season 3 episode number 11, and we'll talk about finance and how you do to start with a right foot in your financial success in your business, and what is the ways that people fail when they're starting a business and making decisions in regards to their finance. Before we start, we want you to please put thumbs up if you like the information, share the information, put thumbs down if you don't like it, and share everything that you think might be helpful for somebody else. So let's start. So let's start from the basis. What's the first financial steps you gotta do when you start a business? But we'll talk about in accounting. You get your EIN. You start a business in America, by the way. You do that EIN, right? And then you create your bank account with your business name. You have a LLC or a S Corp or a Corp. We'll talk that in other episodes. So we'll leave that link before for you actually to check those. And then what do you do with the money? If you get a loan, what do you do with the loan? If you don't have a loan, what do you do? So one of the things that people normally try to do is to buy everything and get in debt as much as possible to start a business. And one of the things that is really important for you to don't be liable, don't be like working all the time with the pressure, is be conscious of what kind of loans do you get, if you're going to get a loan, and be conscious of what is the rate in which your business is going to actually give you a return, right? Because this is really important. Know your numbers. You don't know your numbers, how much money comes in and how much money comes out, you won't be able to plan for the future. And it's really interesting because many people don't know this. And many people have you hear it, but you don't know what that means. And it's because it's so simple, it looks so simple, people just misinterpret it. So let's talk about a little bit about that to see how these ideas will resonate with you. All right, so what we have to understand, if you're gonna get a loan, and I think I said this before, you're going to get a loan, try to get it from somebody that is not a bank. And when I mean your mom, your dad, your relative, your co-workers, your brother, your sister, somebody that won't charge you high interest, because that's what kills people. I remember I used to work with this business owner that to start a bar, he got this huge loan, and a matter of fact, it wasn't a huge loan, it was a huge interest in their small loan. And because he didn't have financial education, what he started doing was not paying the loan or paying the minimum payments. If you happen to have a loan from the bank or institution with high interest, pay those loans first. Do not take the money that it looks like is coming to you and go to vacation. What people most do when they start a business, they start having a little bit of success and they start buying new cars, new houses, new boats, and going to vacation. First, please pay your debt. And mostly the debts in the business, because that's going to be the cost in times that things are not doing well, that actually give your operation cost is really, really high. So the income is not there, and then you're going to start trying to look for other ways to actually reduce those operation expenses in personnel or people that really is important, and you have to lay it off, or you have to ask them to leave or not to hire them anymore. So be conscious if you're getting a loan, if you're paying those loans, try to put most of the money that you are making, or your revenue or your income, towards paying those loans, right? You will have time to go to vacation. You will have time to buy new cars and new houses. Remember, the only person that you have to be secure with is yourself. Many people are starting a business just because of ego, because their mom has a business, their dad has a business, their friend has a business, and you want to be the person that people say. And more in Latin culture and more in immigrant culture, you just want to have a business to be the owner of the business. Because you want to say to yourself, oh, I'm the owner and I have money. And that's not really the reason to start a business. So your financial stability depends on how well you manage your finances. How much that income is coming and how you are reinvesting to your own business, right? That financial stability will come with the decisions that you make in cold blood, thinking about it. Something very important that many fail in this: your money is not the business money, or the business money is not your money. So have a salary. If you're a business owner, have your own salary. Do not use the business money for your personal money. And when you have partners, business partners, this is crucial. Do not use the business money for your personal stuff. And that's really a rule. If you start doing that, you will be disorganized. If you start paying your mortgage with the business money, you start paying your car with the business money, unless it's for the business, of course, you're going to start unbalancing your finances. And this is really, really important to learn to separate. It's very, very important. You can be in payroll of your own business. That'll be awesome, and it help you with the taxes. But really seek in these decisions, seek for the help of an advisor, which is a tax lawyer, tax accountant, or at your CPA, your bookkeeping. Because that's one of the major problems that we see with business owners, is that they use the money for their own personal use, to buy their food, to buy their clothes. So be conscious on how the money of your business are coming and how you're distributing, right? Not all the money can come out. Think about what is the money you have to storage, what is the money that you can spend, and what is the money that you have to reinvest. Right? You are part of the business operating cost. It's not that the money is yours. I see many business owners that happen, that they start getting their money and suddenly the end of the month comes, or the bills have to be paid in auto pay and they don't have any money. And they didn't know why. Just because you have a lot of revenue, a lot of money in your account, because you're doing, of course, your business is being successful, it doesn't mean that money can be spent. And they want you to understand and really, really clear, because that's what many people do. Because you think, I have $1,000 more, so I can actually pay for it. And because I don't have a structure in the way the money is, what happens is then the end of the month comes, all your bills come out, and you are in negative. So be really, really conscious of how to distribute your money. Be really, really conscious and understanding that the business money is not the owner's money. Like we were talking about these mistakes and how to fix them. I want to go back to business loans. Try to get a business loan from somebody else, not from the bank. Second, pay your business loans as fast as you can. If you have a business loan, try to pay as fast as you can. Do not start buying fancy stuff. Stop gooching out. You don't need to gooch out. Be careful with your ego. In financial education, we have to be really careful with our ego. Are we going in a business? Are we buying stuff because of our ego, because we want to demonstrate that we have the money, we want to demonstrate that we have business, we want to demonstrate that our business is successful? Or we are doing it really because we want a long-term stability or financial stability, or you love your business? So you got to be that really, really clear. If you make decisions, financial decisions because of ego, what you are doing in the most cases, you are making decisions no intelligent. You are making, and I don't want to judge, but you are making decisions with your emotions. And be careful as a business owner with that, because remember, your business, if you have more people working with you, it's not only yours. It's from the people, from your talent, from your employees. Have a structure in your business finances. What I mean with that is, we have talked already in our accounting episode how it is really related, but I want to touch that again. You have to be looking at your three most important statements: your profit and loss, your balance sheet, and your cash flow statements. Every single month, or every 15 days, every week, however most often you can, look at those statements. Look at the reality of the business. Be in the reality. And I want to finish with this. This is two kinds of business: the business that make money and the business that don't make money. There is no stable business. Or the business makes money, or the business don't make money. So if you are in the business that don't make money, I want you to go look at your finances and fix it. Okay? I hope you really like this episode. It's really important for all business owners out there. Even if you are starting, or even if you already have a business, but checking your finances. Be completely honest with yourself and work towards it. If you have any questions, please give us a text, comment below. We answer all the comments and we're ready really to help. See you in the next episode.